Welcome guys to another video. In this video I am going to show you the ultimate supply and demand trading strategy that you need to learn in order to increase your win rate and see yourself getting in some good risk to reward ratio trades more often. Guys, I've been off of YouTube for quite some time and I've been sorting out some stuff, but I'm going to be bringing you more regular content as you guys have been requesting regular content. Most of you have been inboxing me asking me where I've been. But guys, I've been sorting out some stuff, but that is now out of the way. I'm going to be bringing you more regular content. So without taking any longer, guys, be sure to subscribe and also go and follow the Telegram channel. Go and join the Telegram channel. Link is in the description down below. Do not forget to follow all the links in the description down below. Those are my official links. So without taking any longer, let me go onto the computer and show you guys a supply and demand trading strategy that you've been asking for. Be sure to take notes, ask questions in the comment section down below if you do not understand something about what I'm going to talk about, guys. So let's go on to the charts and I'll show you guys what it takes to trade supply and demand profitably. Let's go on the charts right now. So guys, we are on the charts right here. This is a GBP USD 15 minutes chart. And I want to show you guys how you can trade supply and demand using the approach of smart money concepts, which I showed you in the previous videos. Now, I know some of you guys may be wondering, what is this? What is this? What is supply and demand? But I am going to show you what supply and demand is in a moment. Just stick with me. I'm going to show you what supply and demand is in a moment. Okay, so we are on the 15 minutes chart. What I want you guys to do is I want you to first understand what supply and demand is. Okay, so in a market trends or market structure or market movement, we always have the market moving in waves. So we have a market creating a high, higher low, higher high, higher low, higher high, higher low, something like this. Okay, this is if you're moving in an uptrend. Okay, if you're moving in an uptrend, then you have on the flip side the market creating a low, a lower high, lower low, lower high, lower low, lower high, and then pushing further to the downside. So this is market movement within market structure. Okay, so a demand zone is a place where the market is creating these higher lows. Okay, those higher lows there, in simple words, that's a demand zone. Okay, and then the higher highs are the supply areas most of the time, not all the time, but most of the time. Those higher highs create supply and the higher lows create demand. The flip side is also true, that these are supply zones. The highs are supply zones where the market pulls back and before pushing lower. Okay, and then the demand zones are the lows. Okay, the lows in the market, those are the demand zones. So when you hear someone talking about supply and demand, just know that demand is where the buyers are looking to buy from, or the big players like the banks, institutions are looking to buy from, and then supply is where they are looking to sell from. Okay, so that is what supply and demand are. So how does this strategy work, and how do you use supply and demand in your trading? What I want to show you is a very simple methodology that you can use or start applying today and start seeing profit coming in to your bank account or into your trading platform as soon as today. So what you do is, when you see the market, when you get into the market and you're looking to trade supply and demand, the first thing you need to do is to first determine the market trend. Is the market creating higher highs and higher lows? Something like this. The market creating higher highs and higher lows, or is it in a bullish trend? Is it in a bullish trend or is it in a bearish trend? Okay. Let's just do the something like this. Okay. Make sure the market that you are looking to trade is trending either bullish or bearish. Okay. So once you've determined that the market is creating a trend, okay, it's creating higher highs, higher lows, higher highs, higher lows, like that. Okay, what you do is you start to look for market structure breaks. Okay, make sure you look for a market structure break. Market structure break is when a higher high or a high like here is taken out by the price. For example, at this area. Okay, that is what market structure breaks are. Okay, like here, look for areas where market breaks structure. Now, when you look for areas where market breaks structure, don't just start to place your trades, because that's the mistake which most people make, and then they end up having their stop losses hit, or having their trades go into serious drawdown. Don't just jump into a trade like this. Okay, what you do whenever you see market creating a high like this, okay, wait for that market to pull down and create some sort of demand. Then don't just think that this is demand. Wait for a confirmation that this is a good demand area. When this high is broken, or when there is a market structure break, something like this. Okay, so when you see a market structure break like this, okay, when you see a market structure break, don't just enter a trade there. Okay, wait for that market to pull back below this former supply zone. Okay, make sure you wait for the market to pull back below supply, or below the previous supply price, like this. Okay, and then you look for market to come back to this area here of demand that took out this supply. Okay, so you wait for market to come back here now before you buy. Now, how do you go about this? You go about this by looking for these demand areas around this area like this, where the market has taken out a previous high. Then this is confirmed as a valid demand. Why is it confirmed as a valid demand? Because when there is demand for a specific item in the market, there should be supply for that specific item. Okay, demand in the market increases only because there is a shortage of supply. So when the supply is fulfilled, how is supply fulfilled? Supply is fulfilled when the demand exceeds the supply. Okay, then that supply is fulfilled, and when supply is fulfilled, you get what we call surplus in the market. Okay, there will be surplus of a certain commodity, and when there's surplus of a commodity, the price of that commodity will eventually drop back to previous demand area. If you guys understand the economics behind that. Okay, so it pulls back down to demand. So that's what you wait for. Wait for market to fulfill previous supply. Okay, and then market drops back the price to demand area, and then that is where you're going to be looking for your buys on the lower time frames. Okay, this structure, you can look for it on the higher time frame, then drop down to a lower time frame to look for an entry around demand, where you will find maybe an engulfing candle or a morning star formation around demand. Then you can look to buy. The flip side is true for a supply. So let me show you that on the charts, guys. Let me look for an area on the chart where I can show you that. Let me go to the 1 hour chart just to look for a demand area. Okay, so that I can show you on let me first remove the drawings. So on the 1 hour chart, I can already see that there is a demand here. Okay, why is this area a demand here? Why is this area a demand? Okay, let me just give this a name, demand. Why is this candle a demand, or this area here a demand? This area only is confirmed as a demand because you can see that there is aggressive buying here. You have 1, 2, 3, 4 candles, bullish candles, moving away quickly from this previous bearish candle. Okay, so after it does this, you don't immediately start buying, because if you start buying here immediately, this is what happens to you. Okay, when you start placing your buys, for example, when you see this movement here after the break of this structure, you take a buy here, you see what happens? You're stopped out. You're stopped out because you're jumping into the buys quickly. What you do, you wait for market structure break, which is this one here. Okay, you get a market structure break here. Okay, so now this supply, previous supply here, because there is supply here, I think you guys can see here, there is supply here. You see this big bearish candle? That's a supply. So this supply had to be fulfilled by a demand down here. So these candles that took out this supply fulfilled this supply. Therefore, there was surplus in the market for this particular item, GBP USD. So the price of GBP USD had to come back down below surplus, below the supply, to balance the surplus in the market by coming back down to demand. So you can see that it came back down to this demand area. This is where you're supposed to be buying from, because your market structure has been broken, supply has been fulfilled. Then the market, now you wait for it to come back down to demand for you to buy from there. Okay, so what you do when you see this, you go down to the lower time frame, like a 15-minute chart. Okay, go to the 15-minute chart and then come to that area and wait for price to come here. So when price comes back here, okay, you see that there's this big bearish candle which comes in. There's a bullish candle, then there's another bearish candle. Then you find that there are 1, 2, 3 bullish candles, and then this huge bullish candle. Okay, this huge bullish candle here can be your entry point. Okay, it can be your entry point, or you can wait and trade another demand. You can trade another demand, which is here on the lower time frame with this candle here. Okay, you can trade this demand. I'll show you this, guys, on demand. Just the flip side is true for supply. Okay, this is now the 15 minutes demand here. Okay, which is created here. You can see the market goes away from this bearish candle, 1, 2, 3, 4, 5 candles, breaks this structure here. Okay, breaks this structure here. Okay, and then pulls back to demand. As you can see, let me zoom in and you see, pulls back into that 15 minutes demand. This is where you put your buy stop, or you can buy after you see the bullish candle like this. Okay, and then you can target your 1 to 2, 1 to whatever. Okay, then you can take that trade like that. Okay, so that is how you trade your demand zone. Okay, using smart money thinking. If you don't want to trade this one like this, or this 15-minute demand, and you want to trade from here aggressively, you can just put a buy stop order here, stop loss below the demand, and then target those highs. Okay, you can target like here, you can target this high or this high, and you'd still win these trades. Either way, you can win these trades. So guys, without taking too much time, that is how you trade demand and supply with a very simple strategy that I've shown you here. If you guys find value, please do give a like, subscribe, and also comment down below, guys. Ask questions where you don't understand. If you want me to do a more in-depth strategy on supply and demand, drop a comment down below. Thank you, guys. Until next time, peace and out.